All right, good morning, good afternoon, I guess I should say for most of us. Welcome back here to Trader Minute. Great to have you aboard. Market has about an hour, 45 minutes left here today. We're kind of getting, kind of through the lunchtime period and into the closing hours here. I'll kind of say what I've said about every day this week. I don't think the close of the market means anything. Meaning if the market rallies into the close, I don't think that means a heck of a whole lot, and vice versa, unless there's some sort of catalyst, for it. But a 10-point rally, 10-point drop doesn't really mean a heck of a whole lot, or doesn't say anything all that different about what the market is going into the close, here today. And one of you described the market to me, and I'm grabbing it real quick because it was a really good description. Those of you who remember Tony, made this comment and said the markets are acting like someone lost in the woods, waiting for someone to lead them out of those woods. And in many regards, they are. There's a lot of flat out there. A little up, little down, but you kind of see after that Friday options expiration, it's just kind of been this, shoot on down here to this level and kind of stick here. And a little bounce, a little drop here and there. But overall, it's been a very kind of neutral type of week in terms of S&P price action overall. Now we have seen the internals turn bearish. We haven't seen the bears take control of the metrics, meaning they're still the bulls are still in control of more of the market metrics than the bulls, than the bears. But we have seen an erosion at a pace that's typical of a stronger pullback to come. Obviously, we'll see how that changes. But regardless, we're up in this kind of what was support area. Obviously supports commonly turn into resistances. We've talked about the retracement area of around this level. We do have the 200-day moving average up above and everything else. I mean, you can make a very good argument that there should be a rally up here to around 275, 277 on the S&P. But overall, we're starting to see the Bollingers contract a little bit. And we've not seen any sort of material pullback, since the January kind of rally here. So it's one where hey, a little up, little down into the close, it's not going to change the picture in any way, shape, or form there. But bottom line. Right, there's not a lot of change, going on in the market here today. But, I kind of look at the market, and we've talked about the retracements and all these other things. But as I watch earnings come in and I watch the economic data come in, there are individual stories out there that are they're dirt cheap. We've talked about some of these, the IBMs, the Western Digitals of the world. They're just dirt cheap stories, and they're just very inexpensive stocks and equities. Even Ford, dirt cheap, and General Motors is a little more expensive than it has been, but still quite inexpensive. And there's a lot of those, right? A lot more in the market than what there have been in a long time. But there's still some high-priced names, and even when you look at things like an Apple that have pulled back, substantially, you take a look at something like this, it's not like Apple is cheap. We've looked at Apple on a historical basis. It's not cheap, right? And a lot of stocks are kind of in that position. I mean, you get into some of the Adobes of the world, you're talking about expensive, not cheap. You're talking about expensive. You get into some of the industrials, even the Boeings of the world. We're talking about a fairly expensive stock here. And that is one of the elements that's out there. Is we do have a few cheap stories, U.S. Steel, for instance, but there are still some really expensive stories out there, and that continue to play. And it's a market where there are some macro factors and macro winds out there that are pretty prevalent, and in many ways have been disregarded. And when I look, I see three big three big factors, right? One is the real obvious one, and that's the U.S.-China trade war. And you heard my opinions last week on the quote unquote news that we got on that really was irrelevant. It did catalyze a little jump in the market, but we even had the Commerce Secretary today come out and say, hey, they were miles away from an agreement. And as you look at kind of the events that are happening, not the speculation, the actual events, where some of the Chinese negotiators, said, basically U.S. said no, don't come. We're not far enough along for face-to-face talks. When you start seeing some of that kind of stuff, things are going on, but it doesn't, there's not exactly a warm and fuzzy here just yet. And the market is pricing in a resolution. It's very clear the market is priced in a resolution, that a resolution is coming, and it is on that side. It is slanted, expecting that. The market's not slanted and expecting trade breakdown, trade talk breakdown. And if this market got hit with some sort of news that said, hey, talks broke down, we could be talking about a very fast, very sizable pullback, as the market is very much on that side of, hey, there's going to be a resolution. Not saying that one or the other is going to happen. But when we look at how the market is positioned and how the market is placed, the market is on, if we were just to kind of look at this, in a linear format, and yeah, that's not a very good line. That tells you my mouse skill, my mouse drawing skill. But, no resolution versus resolution, right? We look at, right in the middle here, this is kind of a neutral. When we look, we're probably somewhere up here as far as what the market is priced in, as far as a resolution coming. Meaning it's not fully priced in, and if a resolution happens, we're going to see more uptick in the market. But, this is something where the pricing in by the market is much more on the resolution side than on the no resolution side. So anything that would tip the market this way could be brought on, or could have a sizable sell-off. I'm not talking about 20 to 40 points, right? I'm talking something much more substantial than that, and more of a retracement of the recent rally that we have seen. And so with the trade war, it's going to be ongoing. We're going to continue to get news. It's going to continue to create some oscillations. But we really haven't seen anything substantive. And the only thing we can really look at is how the market is positioned, how the market has priced it in. And that, hey, the market hasn't priced in no resolution or has come off of that side. And, if we start to get the market having to shift, that would lead to some sell-off. That's issue number one. That's the most, what's the right word here? The most blatant issue, the most visible issue. The other two, and if you're into political, political stuff, these are a little more prevalent. But if you're like me and, you follow the politics just because you have to a little bit for the market, it's really, okay, whatever. But one of them is Brexit, right? Brexit, which, when the Brexit vote happened, we saw the markets react. And as Brexit news has come and as Brexit news has gone over the last couple of years, we have seen the markets basically ignore it. Basically say, Brexit who? Is it going to happen? Is it not going to happen? It's going to be a little different. And the market has kind of completely ignored it. And when we start to look at what's going on with Brexit right now, there's some big key changes that could come to place or come to pass here that could, create sizable shift here in the market. For the most part, I do believe Brexit is priced in psychologically. Meaning, it's not going to be something where, Brexit headlines are going to cause investors to, jump. It's priced in psychologically. I don't think it's priced in financially. Meaning, I don't think you can look at a a bank like J.P. Morgan or any other company that deals there in Great Britain and go, oh, it's financially priced in. Brexit is financially priced into the stock, into the into the financials, and so it's a very interesting situation where, yeah, psychologically it's priced in, yeah, it's going to be ongoing, it's going to happen, but when investors have to take a hard look at what it could mean financially, there could be some disruption there. I don't think it's a huge risk, but I don't see any resolution coming to it soon. The second, and kind of lies in between the trade war and Brexit, Brexit being kind of minimal risk, trade war being kind of the big game, is the U.S. government shutdown. And you haven't heard me talk too much about this, right? Other than to say, hey, yes, there's an impact. We're hearing some companies talk about the financial impact. Southwest Airlines today had some very interesting comments on it. If you haven't seen those, definitely worth checking out. But they're definitely not happy about the government shutdown. But U.S. government shutdown. And when you look at what's going on, and you look at how things are unfolding here with it, it's not two sides coming together, finding a chord and saying, hey, you know what, how can we make this work? It's two sides coming together in a rather hostile way and looking at each other and saying, no way, you're going to give me what I want or else. This almost notion of willing to cut off their nose to spite their face. And that's what we're seeing right now. We are already into the longest shutdown in U.S. government history. And we've seen enough shutdowns over the years that we know, okay, what the impact is. But as we start to get into a prolonged shutdown, and we start to see some budgetary issues come. And obviously there are mechanisms to solve all these, right? But this is something where we could start to see, as time goes by, we could start to see a little panic start to brew here in the market. I don't think it's something where, if the government, if magically a deal comes up, then boom, off we go and the market's off to the races. I don't think that's going to be the case at all. But this is one of those where it does create a downside risk, where any further erosion or as just simply time goes by and there is no resolution, we could see the market start to get a little panicky over it. When I look at these three things that are going on in the macro side of things, I don't see resolution coming to any of them anytime soon. They're going to be with the markets for a much longer time period. I don't think trade war stuff is going to go away for at least the next 6 to 8 months. Right? Obviously, we could get a sooner resolution, a quicker resolution, but I don't think that's in the cards. Government shutdown. Hopefully, it doesn't go for another 6 to 8 months. But at the rate it's going, it seems to be getting things seem to be getting further apart day by day than closer together. Albeit, I know some disagree with that. Some see resolution coming here very, very quickly. But overall, as the market kind of looks at it, it's kind of looked past some of these things as, hey, they're not that big a deal. But as we go forward and there is no resolution, some worries will start to creep up. And those worries will be catalyzed on days where earnings reports that come in look bleak and economic data that comes in looks bleak. Right. And, this morning we saw the PMI numbers here in the U.S. Okay, they were good enough to keep the market from selling off or getting too panicked over anything, and rightfully so. Right? And the earnings so far, they've been a kind of a mixed bag, but you know what? Relative to expectations and relative to kind of where some of the fears were a month ago, they've been pretty decent, right? We haven't had enough to really make a huge statement about earnings season, but overall, it's not exactly a terrible season shaping up. In fact, I think you could argue it's a decent one for many companies and many sectors, at least here so far. But as we get more companies reporting and we start to see the guidance, the 2019 guidance from more companies, that kind of future picture is going to start to shape up a little bit more. And if we have a day where we have a bunch of companies who just lower guidance going forward, that will be something to spook the market, and the headlines are going to come up because of the trade war and because of Brexit and all that. But that will be the little catalyst, so to speak, there with it. But that's, as I look at the markets right here, as I look at where things sit, where things lie. To me, that's the risk. The risk is the fact that there's no real resolution coming to the three big kind of poster events out there. The market's going to be highly susceptible, to erosion here over the next little bit here, and we'll kind of take a look at after this week. Earnings season will, I think there'll be enough earnings reports that have been released where we can make some concrete statements about it. But overall, this is a market where I think path of least resistance is lower, but I don't think I don't think we can look and go, well, the odds are 80% that we're going down. I think the odds are pretty neutral here, up or down. It's just going to be easier to go down than to go up. And going up is going to require, positive catalysts to happen. And we could definitely get that. We could definitely see that, come into play as we continue to go forward here in the markets. I don't think today means a hill of beans for the markets. I don't think we can look at the markets today and say, well, because of today's action, this, or that. I think it's pretty much the same thing that we saw on Monday. I don't think yesterday meant a whole lot other than, we're seeing, early morning rallies not getting bought up. But, then again, you can say, hey, midday sell-offs not getting sold off further. For the challenge, I have my position in XLF, which, it's been up 10 cents today. It's been down 10 cents today, just kind of in that range, not really going anywhere, not really doing anything. And, that definitely is not good for an option value. You can see the volume on the XLF today. It's going to be a very low volume day. It is going to be one of those kind of just totally forgotten, who cares type of volume days where the price action today has very little meaning for what happens going forward. And this is something where I think the upside risk is, up here to about 26.20, 26.30. Is about the upside risk. I think the downside potential is somewhere down here around 24.50, here with it. I may need to look to adjust it a little bit here into the close. Having looked at it, I'm willing to take it into tomorrow as is, but I can't go into the weekend as is with, let's just say tomorrow it doesn't move, or, just goes up or down 4 or 5 cents, right? Which I know, yes, that's technically movement, but when you're in an option trade and something moves, something that's, something moves 0.2 or 0.3% on the stock, it's not exactly a move. And so overall, I may need to adjust if I don't get a move here tomorrow, here with it. And we'll look to do that. We'll look to do that if I have to. I still don't think I'll have to, but again, we'll kind of play it with with what comes. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.